Bang. All right. What's up, y'all? We're going to talk about how to be more calm in your trades. And I want you guys throughout this to be putting questions in the chat so that I can answer these questions. No question is dumb. If you feel a little uncomfortable, DM me the question and we'll go ahead and get rolling. DM me on Zoom, not on Discord, right? So being calm with the trades, right? If you're trying to be more calm with the trades, one of the first things that comes with it is developing confidence, right? Think about anything that you do. When you know what you're doing and you're confident in doing it, you're calm, right? You're confident in your skill as a driver, you're calm driving, right? If you're confident in your skills cooking, you're calm cooking, right? People who do public speaking, they're confident in their public speaking skills, so they're calm when they do it, right? So the first thing you want to establish is being confident. So how do we get more confident in our trading? We have to educate, right? So that's classes, that's courses, that's researching, right? You come up on something that's confusing, you Google it. If I say something during this class and it's like, whoa, what was that? Ask the question and then go Google it after, right? So you have to really do a deep dive into all these things so that you can have for real calmness while you're trading. So you want to educate yourself and do a deep, whether it's day trade, swing trade, scalping, swings, leaps, right? Whether it's stocks, forex, crypto, futures, commodities. You want to make sure that you educate yourself on it so that you can be more confident. A great example of that is you see something it can be a bullish engulfing pattern on a daily chart. And so you see the bullish engulfing and you have that piece of education, like, oh, that's a bullish candlestick, right? But you don't realize that this bullish engulfing is in the shoulder of a head and shoulders, which is a bearish pattern, right? And so if the overall pattern is bearish and it's a head and shoulders in a downtrend, right, on a stock that's missed earnings repeatedly, then now you're seeing why that might not be as valuable as a swing trade or even a trade at all, because you're educated on these other factors, right? And so when you see those things, you're like, oh, okay, well, look, not taking that because it's going against it, right? And you want to have things lined up for your trading, right? So that's going to roll into confluence, right? So what does that look like? That's when you're stacking things in your favor for your trades. So when I'm taking trades, what gives me confidence and calmness is when I'm looking at a trade and we're in an uptrend. One, right? We pull back. Now we're at support. Two, three, we get a bullish candle, right? A hammer, a bullish engulfing, what have you, right? A bullish outside bars, that's bullish engulfing. So just a bullish candlestick. And then four, let's say there's heavy call buying on it, right? So all of those things, uptrend, at support, bullish candlesticks, heavy call buying, all those things on their own can be standalone ways for you to look at something and pique your interest for going long, right? But when you add them all together, it creates more confidence because you know that with all these coming together, it's a higher probability of my success, right? Buying at support, buying in an uptrend, buying with bullish candlesticks and bullish price action, buying when there's heavy calls being bought already. That's going to establish that. And you can use other things too. Seasonality comes into play. Indicators come into play. Back-tested strategies come into play. When you've taken a strategy and you can confidently say, based on data, I know that when the RSI on this stock goes below 30 on the daily chart, the past 5 years, when it's gone below 30, it's recovered and averaged a 5% move to the upside within the next 2 weeks. Right? If you know that it's usually going to give a 5% move within the next 2 weeks, then that's giving you the confidence to take that trade based on that fact. And it might not be 100%, but you now have an extra thing backing you up versus somebody who goes into the trade like, it looked like it might go up, I'm gonna buy it, right? So you can be the person who's, it looked like it's gonna go up, so I'm gonna buy it, versus it looked like it's gonna go up because it's in an uptrend and it had a pullback. It's at support with bullish candlesticks and it's heavy call buying that goes along with it. All right. So we have any questions about those things I just said, like any of those that I said so far? Y'all can put them in the chat. All right. And while those are coming, I'm gonna just think about anything else that comes into confidence. Another thing is collaboration, right? So go ahead, put questions in the chat. With confidence, you can get confidence through collaboration, right? And so that doesn't mean that you're relying or dependent on somebody to verify your trade. But if I see something, this happened last week. I said SPY was going to go to 410. I was on a Zoom with some people from the boot camp. I said SPY's going to 410. And then after that, it's probably going to reject, right? Moody texted me like an hour later. And he wasn't even on the call. He said, yeah, bro, look at SPY, man. It's going to hit 411. And it's probably going to fall after that. I said, bro, I just said that, right? So I'm confident in my own self. But when somebody else who's also a good trader says the same thing, I'm like, oh, well, he see it too. Okay, well, yeah, we both use, we already rarely miss on our own, but we combine that together. Now I'm more confident and more relaxed in what I'm looking at because I know multiple people have the same understanding, right? If you going to play basketball and you working on a drill and you like, I think this is gonna work on my handle, it's gonna make me a better ball dribbler. And then somebody who else is playing basketball, they're like, yo, that's gonna make you better. You're gonna be like, oh snap, yeah, I'm bet. Right? So think about that. Think about collaboration within the Zooms, within the Discord, even outside of that, if you have a trading partner, if you have a trading accountability partner, somebody who you can go to and say, hey mom, this is my trading plan. All right. So I'm gonna text you whenever I get in a trade, and I'm gonna text you the reason I got in that trade. And it should align within these following reasons. Right. And that person will keep you accountable. Or if there's someone else who you know, such as Quinn, such as Shadub, such as Friday, right? These people in the chat, they have the knowledge as well as they've been learning. Where if you see them looking at something and you're looking at it, you're going to be more confident and calm because we're seeing the same move. Okay. So we might come back to that and add something to it as I go. It looks like we have no questions, so we're going to keep it rolling. Bam. All right. What fine is this? 30. All right, let's go to alert and aware. So what you want to make sure you're doing is staying aware of what's going on in the market. And there's different ways you can do that. So one is literally setting alerts, right? As I trade, come back over here, slide up. All right, as I trade, even during the day, I have multiple alerts set. All right, so one of the alerts that I took today, I ended up taking SPY calls towards the end of the day. All right, so I got SPY calls in the middle of the day. Those ended up going down. And then I got SPY calls at the end of the day. I got 384 calls and SPY ripped, right? And so I'm still in these 384 calls that expire on Monday. And here's why, right? I had an alert. SPY was doing an inside candle on the 30-minute, right? I had multiple inside candles. 1, 2, 3, right? Inside candle just means that there's this candle right here, and the price action following that is all contained inside of it, right? So we see that after this 30-minute candle came, no 30-minute candle, right? These next 3 candles, next 90 minutes of price action, none of these broke the low or the high. They're all inside. So I set alerts, right? Inside bar breakouts is a trading pattern that I've traded tons of times, so I'm confident in it. I know how to trade it. I have my entry, my stop loss already figured out. And so I set alerts. I was shooting pool when this alert triggered. And it triggered, I got in my calls, and I put my phone down, right? So why could I be so calm when I got in that trade? I also set an alert for my stop loss, right? So why could I be calm? Because I used the alerts. I was aware of what was going on. Okay, we got 30-minute inside candles. I set an alert for the break on QQQ and on SPY. Here's where it triggered, right? I had alerts set for the break to the downside on SPY too. I was going to take puts, right? The alert triggered. I got in the trade ran, and we're good. How did I know to choose the 30-minute time frame? It wasn't a how did I know to choose? I just was looking, right? So while I was trading, I just was flipping through different charts, trying to see what patterns there were, and if there was anything that I could take a trade on before the end of the day. And I saw this on SPY. So that's where we come back educate, right? So if I said I traded an inside day pattern or inside bar pattern, and that was confusing to you, or you have no clue what the heck I'm talking about, that's something to write down, read, Google, watch videos on, and we've talked about it before, where then now you can gain the confidence in doing that, right? So uh, that's it. The more you know, the more you can trade, right? So here's where somebody will say, oh, well, let's do this. Let's replay and take it back. Let's take these lines off. All right. So somebody sees this. Give me another candle, baby. Bam, bam. All right. So somebody sees this, they're like, SPY is about to chop the rest of the day. There's nothing going on. There's no trades we can take, whatever, right? That's what somebody else sees. All right. What I see is, okay, cool. We inside on a 30. I'm gonna wait for a break to the outside from one of these candles, and this is something that I'll just look at, right? When I'm flipping through candles, it can be the same thing. It can be, I'm on the 15. I see we just tagged this support. We're bouncing off this support, all right? So maybe I'm gonna take a trade on the support. I can come in and say, okay, cool. We got a trend line right here. All right, let's look at this. We broke trend line, right? We got a red candle for the pullback. And now we're pushing up, right? So it's multiple ways you could trade, but when you have the knowledge to look at these things and instantly see that, that creates calmness in me because I know what I'm looking at. I know what I'm trading. I just traded the break of this triangle. Simple, right? Why am I so calm? Because I know that these are usually going to work out in my favor. And if it doesn't, then I'm just going to stop out. It's cool. I lost the trade today, right? We opened up the market today. We made 200% on Tesla. I took a call on SPY. I lost 40% on that. And then I got in another SPY call, and that went up 40% by the end of market. Calm, right? Do I have a preferred time frame? No. It just depends on what I feel like doing. If I feel like scalping, I'm on a 135. If I feel like day trading, I'm on a 1535. If I'm swing trading, I'm on an hour and a daily, and maybe the weekly. Does a higher time frame give you a more stable, truthful direction? Yes, of where stock is headed instead of a 1 and 3 minute. Absolutely. The higher the time frame, the more validity to the trade. The stronger the move, the stronger the trend, right? Lower time frames hold for smaller times, right? Lower time frames hold weight for shorter time frames. Where's my stop loss? So on the break of this candle, because I was trying to day trade it, I just put my stop within like right below these highs. So on this breakout, one of the things I picked up from Moody and doing some extra research, because he always talked about this 50 retracement. I did some research and found that the 50% of that candle can be used as a either resistance or as a not a resistance, a potential support or a stop loss, right, on these trades. So that's what I was looking at. But ultimately, the reason I got next week, expiration next week, is because I could swing it if I wanted to, which I didn't plan to, but I am now, right? So that should answer that. If you want to trade on a 30 on a 1 hour, how much time on the contracts do you need? You need to have as much time as you think you'll need for your move to come, and then a little extra, right? So if we're looking at trading on the 1 hour and I'm swinging it, then you can go, for me, if it's a 1 hour and it's like Monday, Tuesday, Wednesday, I can go weekly, right? Because I'm going to be trading potentially 5 bars, 6 bars, 8 bars on the 1 hour. So that's going to be like a trading day or two, right? Whereas if you're trading on the daily, then you're going to be looking for, if you're looking for a 3 candle, 4 candle move, then you need to have extra time, because if it doesn't play out, you don't want your contracts to be at 0. All right. So one of the things with time on your contracts is just making sure that you have room if it doesn't work. All right. If you think the trade is Friday and you think the trade's gonna pop off and it consolidates, you don't want to get burnt up on a consolidation, right? So that's why a lot of times you'll see me trade on Friday, contracts that expire next week, but still close them on Friday. And because I still gonna make money, right? But if the stock didn't move in my favor, I'm getting tore up by delta and theta instead of just delta, right? And that's where it comes in with the extra week, all right? For sure, you're welcome, you're welcome. Is that channel break good for morning scalps? Example, waiting for the first 15 minutes and play off the opening high and lows of the first candle. Yeah, it's a 15-minute opening range breakout. You can. The bigger the time frame, the more solid the move should probably be. But you might have missed the move as well. I don't really like trading the beginning of the day unless it's a gap fill trade. All right, let's get back to calm. Boom. All right, collaboration, education, confluence, education, so it sounds better. All right, alert and aware, right? Set alerts, all right? So you don't have to watch, right? If you're sitting here looking at this, you got into a trade and you sitting here in your trade and you're looking at your trade like this, right? If you're in the trade and you're sitting here like this, it's pretty hard to be calm when ooh, look at those red candles. Oh, you're gonna get scared, man. For most people, you're gonna get scared. You're gonna be like, oh crap, it's reversing, it's over, the move is done, whatever. And that might not be the case. Right. So setting alerts can help alleviate your looking at this and having your emotions go up and down on this roller coaster, because every candlestick that comes out, you get some green candlesticks, you happy. You get red candlesticks, you like, oh snap, is it over? All right. Switch to a bigger time frame is one way to do it. Second way to do it is just set an alert. And that'll work if you're using trend lines, if you're using moving averages, whatever you're using, you can set an alert. But when a moving average crosses over, if the trend line gets broken, whatever the case is, right? So you want to be able to be aware as well. See some questions coming in. I'm gonna get to them in a second. All right. Other part of awareness is what matters to me, right? So last week or this week, we had CPI come out, we had PPI come out, and maybe Powell talked as well. So when you're swinging, all these news events are highly important because we saw what happened to SPY that day that CPI data came out, right? Whole market just tanked horribly, right? And that was this day right here where SPY went down $17, closed down $17, right? Huge gap down in the market. So when you're looking at that, it's important to know what's going on for your swings. Now, if you're scalping, it's still good to know what's happening that day so that you can be aware of anything that's going to occur and what time it is, so you can avoid trading during that hour or whatever press conference is being held or whatever the case is, right? But you got to look at what matters to me. If you're swinging 3 months out, right, you need to know what's going on with that company's news. Are they having product releases? Are they, getting upgraded by banks? Are they getting downgraded by banks? What's happening with the company from like a moral kind of standpoint or a community standpoint? Is there any drama? Is there any negative news? All right, with FedEx having that stuff going on, that's something you want to know, and you might want to try to find that out before it makes it big if you can somehow. To avoid that, if you're going to be looking at holding contracts for 3-4 months, you want to look at the insider transactions on that company, right? I don't care if I'm scalping for 5 minutes if the CEO bought 1 million shares the day before or the next day. It don't matter, right? But if you're going to be in a trade for 5 months and the CEO, CFO, director are selling off shares, that might be something for you to pay attention to and take note of and maybe go into a different position, right? So think about what matters to the trade, what can affect your trade as you go through it, right? The last one is if then. if-then statements, right? So this is a big one, okay? If-then statements are going to help you. I'm gonna add, this kind of goes into structure as well. If-then statements are going to matter a lot for you to be relaxed and confident in what you're doing. Not so much on the confidence side, but relaxed. Because for every candlestick that comes out, you need to have something already planned for how you'll handle the situation, right? Just take it out of trading. When you were in school and y'all had fire drills, tornado drills, whatever kind of drills, the point of those drills is so that if this thing happened, then we be prepared to act accordingly to how we need to manage the situation, right? But imagine if your school caught on fire and nobody had ever done a fire drill protocol at all, then it'd be a mess, right? People be freaking out, running around, don't know which door to go out of. It's a whole mess. Can nobody keep up with whose kids went where, whatever, right? So with your trading, so your trading don't end up like that, you need to look at your trades and say, okay, I'm in this SPY call, I'm on a 4-minute chart. Let's go to the 8, RIP Kobe. I'm in this SPY call. I actually think I traded that breakout on the 24-hour chart too. 24-minute chart. I did. I was thinking about Kobe when I did. All right. So I already know if it comes back here, I'm getting out, right? If it continues to go up, I'm staying in. If it starts consolidating after it goes up, I might swing it. I'm comfortable swinging it, right? If it goes down, doesn't hit the level, but then starts consolidating into close, I'm probably gonna close it, right? And so because I already know for whatever scenario can happen, what I'm gonna do, I'm calm. Because ultimately, I don't care what it does. I already have a plan in place for how to handle it, right? So I really encourage everybody to have in their head, at least, for whatever trade they get in, if it does this, I'm gonna do this. If it does that, I'm gonna do that, right? And when you're in that position, you're not gonna run into those times where now you're like, crap, man, it's going down. Should I stay in? Should I get out? I'm down 20%. I don't know. Maybe it'll come back. All right. I know a lot of people are in that stage. That's how you get out of that stage. I'm down 20%, but I said if I go down 30%, then I'll get out. So I'm chilling. Right. I'm down 20%, but I'm down 20% because the stock's consolidating, right? Imagine that you bought calls right here, right? Say you bought calls off this bounce right here. You're like, that's a triple bottom. I'm buying calls, right? As soon as it comes back in this zone, I'm buying calls. You bought calls here on this candle's close. It consolidated for the next, about 2 hours or hour and a half, right? So your position is down, but are you closing it just because it's down? Because you're trading your P&L and not the chart? Or are you looking at the fact that you're just in an inside bar pattern? Well, this isn't an inside bar anymore, actually, but you're in an inside bar on a 30 and you're just consolidating. You ain't made no new lows. You didn't break the support, right? You're just moving sideways. So yeah, your contract's down, but so what? The move ain't even happened yet, right? Your trade is still valid. So that's major, man. That's major. If you don't take nothing else away, don't ever get on my class again. You pay attention to everything. But if there was one main point, I would say that's the thing you should make sure you're doing. Where do we start, bro, on the education piece for charts? Go to the Discord, go to the recorded classes section. There's a spreadsheet that has all of our classes since, I want to say, April, right? Covering almost whatever you really want to know. Setting alerts is so key. It keeps you from FOMOing and looking at the screen all day. It also keeps your trading plan for the day still validated. Exactly. All right. When you set your alerts, you don't have to sit there and force a trade, right? 2 days ago, we closed ChargePoint, we closed Dash, closed ChargePoint for 100-some%, closed Dash for like 40%. And somebody DM'd me was like, man, I wasn't in those trades. can you call another one real quick? Or since the challenge is over, can you call a day trade? And I was like, yeah, bro, if something triggers, I mean, my trigger for pin went off for calls already, but I didn't call it out, you know? And so it was like, ah, man, we'll call something else. Right. And this was the pin trigger right here. And after it went triggered, it went up 4%. But when we were talking about it, it was already up like 3%. I'm like, I'm not chasing it. But he was like, man, okay, and he got it, right? The dude was like, well, look, bro, don't force nothing. Basically just because I want to trade, like don't force nothing, right? And I was like, yeah, bro, if I see something or if one of my alerts triggers, cool. But it allows you to go and live your life too. I've sat and looked at a 1 minute and 3 minute chart for a whole freaking trading day. It's not fun. Your eyes hurt, you're tired, you're hungry, you're thirsty, especially if you do it on Zoom, right? It's not comfortable, right? But if you just set some alerts, you can put it in the trade and walk away, like Kim always talked about, right? So set your alerts and you can walk away. Are there any indicator strategies that can confirm reversals pretty accurately? Just look for bullish candlesticks at the end of downtrends. Look for bullish candlestick patterns, not just bullish candlesticks. Look for indecision candlesticks at the end of the trend, right? That's pretty much the simplest thing to do. I would say if you have a uptrend, right? You have an uptrend move, and you start seeing a bunch of rejections, right? Boom, 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 right? If you see a bunch of rejections, yeah, I'm like, okay, yeah, buyers ain't holding it no more. That's my thing that's making me look like, yeah, we finna drop. All right, simple. So just make sure you study candlesticks and learn what candlesticks mean, and how to read like the story in the candlesticks. My charting is good. My reading of price actions getting better. I make more winning calls than bad, but I can't for the life of me let go of my bad plays. I let too many run into big losses. All right. Here's how I break down that to people. There's a lot of different ways you can look at it. One of the things that I tell people when you're in that position, which everybody goes through for the most part, of cutting your winners too short and letting your losers go on. The way I look at it is if you had two people that you could be in a relationship with, and one of them was toxic, abusive, disrespectful, and the other one was loving, caring, and supportive. Which one would you cut off and which one would you try to hold on to for dear life? You should cut off the one that's disrespectful, toxic, and horrible, and try to hold on to the one that's supportive, right? And at that point, it's a no-brainer, right? But it's the same for your trades. If you have a trade that's clearly going down and a trade that's clearly going up, then you need to look at this trade that's going up and see how much higher is it going and how long can I stay in? And the one that's going down, is it about to reverse? If not, I'm gonna cut it. And that's something that we did in the 1K challenge, right? We took a overnight swing on Triple M puts, and we got started with a P. It was another stock for calls, and the next day the puts were up like 60%. The calls were down 40%. I cut the calls. Once they hit my target, my stop loss level for the call, cut the calls. That's a new trade, right? That's M. Move on. All right, we get there. Cut the calls, held the puts. Puts went over 100% because it kept moving. So that's how I look at it and how I explain it to people. What I think a good cue for you in your head is, if you're somebody who's always cutting their winners and holding their losers, is look at the trade and ask yourself, if you weren't in the trade, would you get in? All right. So let's picture this. If we were trading SPY right here, and we're right here, we just had a candle break above this candle, and we got in calls. That's valid, right? Absolutely valid. Cool. All right, we're in calls. We get this candle. Give me one more. All right, we push up here. No, this isn't SPY, this is PAN. But we push up here. We reject. right? Assuming that we had no understanding of zones and no understanding that this was a clear area to take profits. Assuming we didn't know that, we get this candle that's a huge rejection, bearish candle, and now our calls are down, okay? Do we close the trade? Do we stay in, right? If you looked at this trade and you just pulled up this chart today, would you buy it? Nah, you're not buying this candle. This is clearly a bullish candle. I mean, a bearish. This is clearly bearish. This is a big bearish engulfing candle that is a huge inverted pin bar. You're not buying this, right? So if you're in calls, it means it's time to let go, right? And if it comes down here, most people are still sitting here like, well, man, I'm down 60%, but maybe it'll flip up. I just hope that tomorrow it'll go up. Until you can test your hope strategy, you need to find a strategy you can test and actually put some logic behind. All right. So at this point, you wouldn't buy calls. You pull this chart up, nobody's buying calls right here. All right. And so for that reason, if you're in the calls already, it doesn't make sense to continue to hold them. Right. So hopefully that makes sense. And you can use that cue when you're in a trade and it's going down. Is if I wasn't in this trade, would I buy it? If the answer is no, then you should get out the trade. Because if you see the trade, removed yourself from investing in it, if you wouldn't buy it, that means you don't see it as a great opportunity. And if you don't see it as a good opportunity to be in, then why are you in it when there's so many other stocks you can trade? All right. Cool. Cool. I feel like that's enough class already. I can stop there and just do the rest tomorrow. All right. How could you set your stop loss with a strike price? Like when I set a stop loss, I set it at a premium lower than when I got in, say 10%. That's the premium. Is it possible I could set stop loss with a strike? Do I use fig retracement and just set up the percentage? What do you do? I very rarely use percentage stop losses because the stop loss I get in is going to be arbitrary. I mean, my percentage is going to be arbitrary to the move, right? So just because I caught a breakout at 10:05 versus at 10:07, right? If we get a pullback, the person who got in at 10:07 or that position is going to be in a little more drawdown than a 10:05. But does that mean that the trade is invalid? No. Right? So I rarely do, but if I am using a stop loss based on a percentage, it's probably because I'm doing something actively where I can't actually look at the chart and see what the price is going at. If it's a scalp, it's usually going to be a scalp from doing a percentage. Or I'm anticipating a quick move. So if I'm doing a trailing stop, then I'll just set stop market orders. Different brokerages have different ways of going about that. But yeah, I use the 50% on certain candlesticks, like trading inside bars or trading engulfing candle breakouts. I will use the 50% retracement of that candle. But other than that, no, man, I just look at the price. Once price is telling me that we're starting to reverse or my trend is dying out, then I'm looking at getting out the trade because there's no point in being in a trade anymore if it's not going the way I want it to go. What platforms allow you to set a stop loss based on the chart, not price or P&L? I'm not sure. That's something you might gotta Google. TOS might have it, but TOS might have it, yeah. Or brokers that you can link up to TradingView possibly. All right, learn. What Jay-Z said, it's not a loss, it's a lesson. Said that in one of his songs. Something like that. All right, learn. All right. What you want to focus on to stay calm, ultimately build confidence, but to help you become calm as you continue your trading journey is immediate improvement and turning your losses into lessons. All right. So what that looks like is you take a trade, you lose the trade. What you need to do then is figure out why you lost the trade. Once you know why you lost the trade, then you can look at, oh, how am I going to make sure that I don't make this same action again? Right. And is that I need to improve my entry? Do I need to improve my exit criteria? I lost too much money, right? We just did this 1K challenge. A lot of people finished positive. I finished positive, right? There's a lot of people who finished 40% account growth, 20%, 30%. There were some people who lost. Right? It was some people who caught majority of the trades, but in talking to them about it, they took a larger position on some trades than others. And the trades that they took the big positions on ended up being losing trades that they then didn't get out of when I called it an exit because they was hoping it'd turn around because they was losing so much and it didn't turn around, right? And then the winning trades, they got out real quick, which is what we just talked about, but it was with a smaller size, so it didn't even make that big of a difference, right? So that's something you look at and you say, well, damn, okay, well, if I know that I want my stuff to be more balanced, and if I know that typically, my gains are going to be 50%, my losses are going to be 25%, whatever, then if I put about an equal amount allocated to each trade, then I shouldn't run into these issues, right? But if you put $100 on a trade that goes 300% and you put $1,000 on a trade and you lose 50%, you got a negative 50% and a plus 300%. But overall, you negative, right? Even though you had a minus 50%, a plus 300, right? So whatever those things are, immediately improve on those. And then going forward, when stuff comes up, you're going to be like, oh man, now usually I look at this and I get out, right? But now I understand that this is just a retest candle. Or now I understand that just because we came and wicked at this level or we're touching this level right now doesn't mean that the bar is going to close here. And so I need to wait to see how this bar closes to determine whether or not I'm going to get out or get in, right? That's stuff that you start to learn and go back, right? And then again, lessons, yeah. So both of these are tied into each other, but shrinking the time that it takes you to go from loss to lesson is going to improve yourself and your calmness. Turn losses into lessons, right? Shrink that time, losses into lessons, right? That's gonna make things a lot easier for you. And then the last one for calm is M, which is move on. Okay, you have to be comfortable with moving on from the trade, understanding that you're not gonna win every trade. Understand that some trades you're gonna get out and it's gonna keep going, the way you planned it. Some trades you're going to get out and it's a great exit. Some trades you're going to get out and then it immediately flips and you end up taking a loss, right? Which happened to me today, right? I got in spot calls, I took a loss, and then I got in spot calls like 2 hours later and it was good, right? So in that, I'm fine with cutting that as a loss because I already know, one, it's just another trade and there's going to be more trades. And then two, if it does make a certain move, I can still get in the trade, right? Just like I showed y'all on my alerts, I had alerts set for whichever way SPY decided to break out. So yeah, I took a loss, but I'm finna go ahead and get it back. And it's not a revenge, it's still a structured planned trade, right? But I'm not holding on to those SPY calls with the idea that they just have to go up because I bought them, right? So you have to be comfortable with moving on, and understand that you, and understand that you can find better entries, right? You can always enter later, and sometimes maybe it's just not the best trade to take. You can trade the next day or the next week, right? So you don't have to take 10 trades in a day. You don't have to take one trade per day, right? So you can move on and keep it going. So to recap, right? Being calm with the trading, it's just I get all the time when I'm on Zooms, when I'm in drawdown on trades, the challenge, bro, like the account challenge. I said it over again, and I'm fine with saying it. I had a $1,000 account. Within a week, it went down to $547. Right, I was down on the account 40 something percent drawdown. Right, so basically, I ended up just turning $500 into 1,700. Right, but even in that, because I'm educated, and I have structure in what I do, and I have alerts set. One of my biggest problems was what mattered to me was off, and my structure was a little off because I was like swing trading with a day trading scalping mindset still, right? But after I went through and I immediately improved on my losses that turned into lessons, I went from dropping the account down by 40 something percent to then going up for the month 70%. But ultimately, I've tripled the account. So I tripled the account in 2 weeks, but I'm cool, right? So just being calm because you're going to educate yourself, right? I know what I'm doing. I'm cool, right? I'm looking for things to line up. So the trades that I'm taking are going to be trades that have multiple factors and multiple indicators showing me that we should be moving up. I'm not trading bullish price action in stocks that are heavily going down, or I'm not trading bullish price action in stocks that are at their all-time highs, trying to hope that it just gives us another big green day tomorrow when I know it's overbought. I know it needs to come down and correct itself. Right. I'm gonna let stuff line up. So I'm gonna trade something that's overextended and give them bearish price action. Right. I'm gonna look at stuff. And collaboration doesn't just have to be with asking people. You can go on Twitter and see people talking about stocks or stock tweets, or look up different charts or ask somebody to chart it, right? Ask Queen or Zay or whoever, to chart something, and they'll look at it. Hey, what would be your entry on this? Chart it up yourself, send the chart to the Discord. I bet you somebody respond. What would be your entry on this? Yeah, you charted that right. Or just did I chart it right? All right. Structure, right? Structure your trades, having rules for what you're trading. I'm trading this type of pattern on this time frame. That way I'm knowing what I'm doing. I'm not jumping around a bunch of time frames without structure, right? I'm jumping around time frames because I want to confirm that the overall trend is the same direction I'm trading on here. I don't want to trade a 1 minute pullback and a downtrend on a 5. I want to be in a downtrend on a 5, catch the pullback for puts, not for calls, right? So that's why I'm hopping. All right, you're setting your alerts. All right, so you don't have to sit here and look at the chart all day. You can be at work if you're at work and be comfortable. If you have the ability to have an alert go off, and you can just like step away from your desk, pull up the chart real quick, and be like, okay, yeah, this is moving how I expect it to. Set an alert for your stop loss into your trade. Right, when your stop loss triggers, you can get out, or you can set a take profit alert as well. All right, you can do the OCO orders that we talked about before the class started, or you can set a take profit and a stop loss order simultaneously, and one will cancel the other, right? OCO. And then having your if then statements, knowing for whatever is going to happen, if this happens, then I'm going to do this. If this happens, I'm doing this. All right, you get in a trade. If it shoots up, I'm going to take profits here. If it goes down, I'm going to take profits here. If it consolidates for 3 hours straight, I'm going to just get out and wait for a breakout since it's consolidating so much. You already have that in your head. And then immediate improvement again, shrinking the time to turn losses into lessons. If you lose a trade today, then you need to go back and look at that trade today, figure out why you lost that trade today, and figure out what you can do tomorrow to make sure you don't lose from the same thing you did today, right? That way you're not going weeks and months having the same issues over and over and over and over and over again. Sure, things are going to pop up again, right? But for the most part, you're not going to be losing on the same things over and over again. A net asks, can I go over how to set an OCO? That's going to depend on your brokerage. That's a brokerage dependent question. I would say look up how to set an OCO order for your specific brokerage. Not all brokerages have them, but you should look that up for your specific brokerage. And there should be a video on YouTube walking you how to do it. Moving on, all right, being comfortable with the fact that you're not going to win every trade. You're not going to have a flawless win streak. Being comfortable with the fact that some trades are going to go up. You know, you bought calls, you got out, they just keep going. You bought calls, you got out, it was perfect. You got calls and you got calls and whatever, right? Like just be comfortable with the fact that the trade you can win or you can lose, you know, but when you structure stuff out and you have the plans and all that, you're more likely than not you should win. And you can always enter later, right? Even if you got in and you got out early, it's not early if it was your plan. You can always enter later if it continues, right? And celebrate y'all wins, y'all. A lot of people beat themselves up for every single time they lose, but they don't put that same energy into themselves when they win. They talk down on themselves every time they lose, but they don't celebrate themselves when they win. I celebrate myself when I get out minus 20% and it keeps going the other way, and I would have ended up getting out minus 60. I'm like, damn, Jordan, that was a good exit. Good job. You know, you stopped the bleeding before it started bleeding. Right? Celebrate your wins. You got in the trade, it went the way you thought, you got out, you know, and then it kept going. Okay, yeah, you missed out on 20 extra percent, but you were right. Right? A lot of folks aren't right. Most traders aren't profitable, but you had a profitable day, you had a profitable week, you had a profitable month. Okay, like celebrate that stuff, man. That stuff matters. All right. So talk to yourself nice, respect yourself. That's it for class, y'all. We went ahead, knocked it out. Like I said, my brother is about to pull up, so I gotta, you know, engage, interact. But if there are any final questions, I'll take them. If we don't got any questions within the next